Hey, welcome back to the Hub channel. My name is Brandon, and if it is your first time tuning into the show, you've tuned into a great one because we have an amazing trade that Jeff just did last week that we're going to be going over here right at the top of the show, along with another trade that he is looking at that is going to blow your mind here. But before we get into that, we're going to be going over markets, obviously, as well, because there's so much happening in the markets, and heck, earnings are going to blow your mind. This could be one of the biggest weeks of earnings that you're going to see in quite a while. So without further ado, let's go ahead and bring Jeff in here. Jeff is the professional money manager, senior strategist over at Ewo Trader. He is our hike and a she guy. Jeff, this last trade that you just did this last week, let's go over this bad boy in detail. Tell me what happened, the profit that we made, and everything else. You've been just killing it lately, Jeff.
Well, there's two types of trades that I look for going through earnings seasons, and they go by extremes. I'm looking for stocks that are going to set up to really break out, and for stocks that really consolidate and then really don't move through their earnings events. And for last week, these are the exciting ones where I'm looking for those stocks that have the potential to really break out. And ASML, this stock just absolutely did not disappoint. Stellar numbers. The stock gapped up, and we are up today near where we would have exited the trade last week. Okay, so not much has changed since the earnings announcements. Right after earnings, we would have exited technically about 2 days after the earnings announcement, and the numbers that you see here are about that. We're off by just a little bit. We captured, even by these standards, we had 146% return. We doubled our money in the trade. This was this was what we call more of a home run trade. We bat a lot of singles, get some doubles every now and then, but this one, when you get a three digit win in just a week, that's a big win, Brandon.
Yeah, looking at 146% profit on this one. Obviously, it doesn't matter the amount you put in, but 146% profit is a home run trade. And I know you've been hitting singles for quite a while now, Jeff, and this is just nice to see here on the books. But what are you seeing, I guess, right now that we went over that trade? It was good that they were able to get out last week. You could even have gotten out today. So that means there wasn't a quick exit on this trade as well. It was a nice, safe, easy, almost easy, too easy of trade, right, Jeff?
Well, it was a big debit, so you did have to put a little bit of money into the trade, but the reward was well worth it. And it was a quick trade. We would have been in on Tuesday, out on Thursday, or at worst, you would have been in on Monday and then out today. So a week, doubling your money in a week. And that's what can happen during earnings season. And guess what, Brandon? We are right at the beginning of at least a 9-week stretch of earnings.
Yeah, and there's some big earnings coming up too, and we have the FOMC meeting this week. We have a lot of other stuff. So what are you seeing right now in the headlines that's kind of tipping your hat and in the markets?
Well, you named it right there. That's really where all the eyes are. They're in two places. First of all, the Fed meeting this week. The prediction is that we're going to remain unchanged. I would be absolutely floored if there was a cut. I don't even think at this point right now the word cut is in the vocabulary.
I don't think so either, Jeff. I think there's zero chance he cuts, and even to allude to a cut here in March, I don't think he's going to do that either. I just don't think there's a way in this environment that he can put that on the table right now.
Right, and he uses different types of words, okay? And we interpret that as either being dovish or hawkish. So, we'll keep an eye on that. But that we're seeing today, I'm just glancing up at another monitor here. We're up about 50 basis points on the broader markets today, which we'll talk about in a minute. This is the type of trade that precedes an earnings announcement, or a Fed announcement. But what's interesting is what lies beneath, and that's our second headline here, is the big earnings week this week. Now, as I mentioned a moment ago, we are just at the beginning. We have over 9 weeks and I'm talking February and March. I mean, here we are. This is the final couple of days of January, but I'm talking about February and March, just full of thousands of companies having earnings. But this week holds some special ones. There's some mega caps that are announcing this week, and this could really impact the direction of the market, which I'll talk about here in a moment. And then finally, when we combine this all together, the last headline I kind of want to post is the talk of soft landing or hard landing. And for me, it's really no landing. And what no landing means is that interest rates stay elevated as well as our growth rate stays elevated. And those two combined just mean for kind of a heated market. Now, interestingly enough, I've been looking at other headlines, and these weren't really, these were subtle headlines about one company cutting 10,000 jobs, another company cutting 30,000. And I'm trying to remember, I saw one company that was actually doing the opposite. They were hiring up to 20,000 this year. I don't recall who that was, but that was the first time I'd seen anybody that was hiring instead of laying off. So interesting dynamics out there,
I
and we'll
think
keep
I
an eye
think
on.
I think you're thinking about the IRS. The IRS is hiring. They're the only one hiring, I
No,
think.
no, the government.
That's what
Well,
you, yeah,
the
that's the
government,
one you're
yes,
thinking
they
of,
they
Jeff.
added to
But
the payroll, definitely. Yes.
I think what too, another factor that may play into this year that I think is different than any other year, along with the macro environment, is the political factor, right? We do have, it's an election year. And so generally on an election year, some candies handed out, in whatever means that might be necessary to help stimulate the economy, make everybody feel warm and fuzzy and that kind of stuff so that we have a good political year. So we'll kind of see how that plays into things as things go forward as well. What are you
Yeah,
seeing in the market right now
keep an
with,
eye on that. Yeah, as far as the
yeah,
broader market, let's take a look at the charts. We'll start with the broader market. The S&P 500, and this is what we call melting higher. Okay, this is where the market moves in increments of 25 basis points to 50 basis points a day. It frustrates everybody, even if you're a bull, because you're expecting a big, fast run. If you're a bear, you're waiting for this thing to roll over. And this is what we call a death by 1,000 cuts, where you're trying to anticipate a reversal or a pullback, and it just doesn't come. This thing just keeps melting higher. As I said, we have a big week this week that could affect this market. But honestly, Brandon, I think the S&P is going to 500, and it'll probably be there by mid-March. And I think that's where we find some pretty hefty resistance, unless these earnings are incredibly disappointing. I think we're headed there on the broader market.
yeah, watching that, I mean, I couldn't agree more with you. I think, honestly, I thought we were going to see a little bit of a pullback not too long ago, but 500 looks like it's in the cards. I see nothing stopping that. Nothing in this earnings season so far has intimated that it's going to pull back now at any time soon. So I think maybe whatever happens Wednesday might start to slow things down, but who knows? We'll see how it plays out.
Well, I put a couple of indicators on, and since you threw out there that I was the hike and a she guy, let me throw some hike and a she candles on. And here's one thing I want you to notice. These are very bullish candles. You'll notice here these big green bars with no wicks on the bottom. This indicates a big, powerful trend. But then notice these last 3 days where the bodies are getting smaller and smaller as we get higher. This is the one thing that, really I could, let me just draw one quick thing and then we'll move on to the NASDAQ. You essentially have a move up higher here, and then you have, just take any indicator. Here's volume, okay? And you have this divergence happening. That is, if you want to start throwing darts at this balloon, there's a couple of darts. So we'll keep an eye on it. Let's jump over to NASDAQ real quick. The Qs have leveled off. I left my hike and a she candles on. You can see that we're just kind of moving sideways up here at 425. Let me put my regular candles back on, and you can see the chop that we've had up here at these higher levels. And make no doubt about it, the bulls are in control, and all the trend lines, all the moving averages, they're all pointed higher for the Nasdaq. We are in earnings week for a lot of mega caps. A lot are on the Nasdaq, so we'll see if this trend does continue. And Brandon, what do you think of the Nasdaq? What do you think of these tech heavy companies right now?
Well, I mean, watching this, I think tech is more in play here than normal. But I mean, we watched the Mag 7 and we're watching Tesla a little bit too. Tesla took a hit this last week. And so, I mean, being that they're somewhat of a technical company, people are kind of watching that as well when they talk about the Qs. So I don't know that. Yeah, you pull up Tesla's dip there last week. Look at that drop from 210, but it is pulling back. It's rebounding a little bit today. So I mean, the Nasdaq is facing a little bit of headwind, but we'll just kind of watch this play out as we go along here.
Well, I'm glad you brought up Tesla, because for our subscribers to our Delta Neutral Breakout service, which is you can find over at ewotrader.com, this is one of the breakout trades that we put on for our subscribers during this consolidation period here right before earnings, and then we get the nice big drop. So our subscribers had a nice little profit in Tesla. Even though the numbers weren't great. So thanks for bringing that up, Brandon. I appreciate that. Let's jump over to the small caps now. IWM is kind of how we track these, and the Russell 3000 and the Russell 2000. All right, and really we're at a point where you call it. Okay, there's argument for the bulls, there's argument for the bears. We're in the beginning of we're in a little bit of what we call an ABC pattern to the downside. If you can't see that, let me draw that out for you real quick. We just go from the highs to the lows there. There's the A leg. Here's the B leg. And then what we would expect is the C leg to then come down, to something like this, maybe down to 180. Okay. Now, that only time will tell, and really the moving average, we're above our short-term moving average. You can see price is bouncing off of that right now. So what we can determine here is that we just need to wait for really what's going to happen on Wednesday, and the Fed announcement and earnings to kind of help us determine which way our small caps going to move. And they usually move independent. They don't follow the large caps all the time. They have their own rhythm and their own pace. So, but Brandon, there's an argument either way, whether you're a bull or you're a bear. You could, there's two sides of that tail right now.
Yeah, trader's market right now. What's interesting, I don't know if you've taken a look at oil right now. Let's take a look over there. I mean, we have USO coming up. I know you like to talk about oil, but I've been watching the pump price go down, but oil's starting to trickle up, meaning we're going to start to face a little bit of that challenge coming up here soon too, aren't we, Jeff?
Yeah, oil did catch a bid, but what was interesting off of this move here is that we had been coming into a little bit of a technical wedge and we broke out, and we broke out to the high side. Okay, probably would have gone long on this candle here on the 24th of January. So that move is still in play. But what's interesting here is that we formed this little island right now that is these three candles sitting here. This pullback today is interesting. We're down about 1.5% on USO, specifically. And we might see a fallback into the range. Okay, the range is below 72.5. Or this could just be a pause before the bull step back in. But make no mistake, what you want to do here, if you were trading this, is just draw a line in the sand and go with the current trend. The trend is higher until it violates either a trend line like I just drew or a moving average or something like that. So that's where we are with crude oil, Brandon.
Trend is your friend on oil. I've been waiting to ask you for so long, maybe a week, 2 weeks now. Gold and silver with the new ETFs in Bitcoin. Are gold and silver at risk at competing with Bitcoin right now as a store of value for a lot of these participants? Or do you see them as totally separate assets in your eyes?
Yeah, totally separate assets. I mean, there's a huge difference between gold and Bitcoin. Gold is something physical. It is real. Something you can hold, it's something you can hide, it's something that you can borrow and steal and all that good stuff. Not that you can't steal crypto, but crypto is just digital, and so Bitcoin and everything, that is just a digital asset. You, like any other currency, you must have faith in the system for it to have value, and that's where we are with crypto. And let me know, Brandon, I know you're big on the crypto, so tell me what you think about that comment. You just got to have faith that the system is going to work, and that's where it derives its value. So,
Well,
but
it's interesting you bring that up because I think prior to the ETF approval, there was more volatility and less faith in the markets. But now that we see the ETF come out and the SEC kind of backing Bitcoin, there may be a little bit more stability brought into the trade here. So people may be putting more risk on. And now that it is an ETF, I mean, you talk about a gold ETF versus a Bitcoin ETF, both of them are essentially digital assets, right? I mean, you're
right,
both trading paper on, BlackRock's balance book. So
yep.
essentially, they are almost the same type of asset. You can't hold an ETF. You can't throw it at the wall. I mean, because you're not buying actual gold. I mean, that's a lot of people may be transitioning over and putting their faith in Bitcoin, deleveraging off of gold over to Bitcoin as a different store of future value to hedge against inflation, as gold has always been in the past. So I look at this as partially a competition a little bit more so than you might. But
Here's an important point: is people are looking at this, if they're looking at it, and we're talking about Bitcoin as an alternative asset. Alternative assets usually only take about 5 to 15% of portfolio allocation. So if they get pigeonholed as an alternative asset, there will never be a big, huge influx of big money flowing into Bitcoin, because it just doesn't happen when you get that label as an alternative. And what you want to do is allocate, I'm going to allocate 5% to gold. I'm going to allocate 5% to Bitcoin. I'm going to allocate 5%, maybe to crude oil. And, you start dividing up. I'm going to put 30% in S&P 500. That's a big difference in money. So I pulled up Coinbase because that is somewhat of a proxy for Bitcoin if you don't want to trade the actual product. Okay. Or GBTC. See if I get that quote popped up here. Is another one that just started trading, and you can see the pullback right after the launch, and then the rally here. Interesting. I don't have more data than that on GBTC, but that is an accurate price. I'm confirming that with another data source. So yeah, that's a good price there at 38.45. So yeah, we have pulled back, but we started this conversation with gold, and gold specifically, which is a real asset derived from the ground and stored in vaults around the world and banks and big heavy locks. You can see that we're forming this long-term little wedge here. So we're getting close to a breakout. And I don't know, honestly, on this type of wedge, whether we're going to break up or down. But ironic that we're in a not only earnings cycle, but also Fed week, when we're right at the point of a wedge in a product like gold. So, and gold's up about 80 basis points today, and silver is up almost 2%. It's off those lows. I thought last week we could be possibly heading down to 19. And boy, when you put yourself out there like that, there's all sorts of players that love to trade against you. And boy, they came in and sent this up. I think we're about 5% off the lows now since we talked last week. And but look where we're at. We're right back in the channel. I mean, right back in the channel. So we poked our little heads out, and now we're popping back in. So not much news on silver, but silver's right there with gold. Something physical, something you can have, something you can hide, and protect against a crazy dollar or a crazy Bitcoin, whatever currency is your flavor of the day.
That's
so, Brandon,
right. I think you like to talk about bonds and how bonds are painting a picture in the whole environment. What are you seeing over there with the TLT right now today? Oh, wow. Okay. Perfect.
well, we have a nice move today in bonds,
Yeah.
which means interest rates are dropping. All right. On the long end of the curve, we had this nice organized pullback. We pulled back right back to look at this. If you look closely here, we pulled back to the 38% retracement level of this big move here. And we held right there for a week. And then I drew my trend line, and today we're breaking out. So if you were a trader and you wanted to put on a trade, well, here's a trade for you. TLT is breaking higher. If it closes here today, let's say it closes at this level, the level is 95, around $95 even. Okay. Your trigger would be a higher close tomorrow. That would be the trigger to maybe anticipate a test. What would my target be? My target would be 100. Okay. The previous high here, I don't know if we're going to go there, but for you bond bulls, meaning interest rates dropping, again, we're not talking about Fed, we're talking about bonds. Okay. Interest rates coming down on the long end of the curve. This is an interesting sign that we're up over 1% today. That's a pretty big move for the long end of the curve, Brandon. So it's a good sign. I mean, we want cheaper, cheaper bonds means cheaper interest rates means a little less expensive everywhere, but we're a long way from where we were a couple years ago.
Yeah, I think so as well. And I don't know if you want to hit up. Do you want to talk about the treasuries today, or should we just get right to earnings? I didn't know if you had
Let's
anything to mention on the treasuries
Let's look
there.
at the
Yep.
short end of the curve real quick. This is
Okay.
SHY, which is the 1 to 3 year treasury. And the only reason I wanted to bring that up before we moved on is because when you're up on 1.34% on something like TLT, which is 20-year plus, that's the long end of the curve. And then you're looking at 1 to 3 years in the SHY, and it's only up 90 basis points. What that's doing is what we call flattening the curve. Okay. The long end is catching up to those short end interest rates. Here, okay, so the curve is flattening, meaning you should have interest rates smaller on the short end and longer, on the longer end, because if you tie up your money for 20 years, you want to make sure that you have a bigger interest rate than if you're only investing for 2 years. Okay, that's the typical way that it's worked. Recently, for the past 18 months, it's been backwards. You made better money on your short-term numbers than you did on your long-term numbers. But here is the point. The fact that both of these are moving up in tandem, okay, is very interesting, because that means rates aren't necessarily reverting back to their normalcy in a fast way. They're kind of moving together, which kind of drags out a lot of the issues when you have an inverted yield curve. So sorry to step on that, Brandon, but I just wanted to point out that The short end of the curve is not dropping. It's continuing to rise as well. And again, these are the bonds, so interest rates are dropping, but so are the interest rates on the long end of the curve. So interesting dynamic happening right now.
Yeah, check that out. That's cool. Well, let's get right over to earnings. There's it could be one of the most anticipated earnings weeks that we're going to have in quite some time. A lot of the big companies reporting, by AMD reporting. What else are you seeing on this list here that kind of tickles your fancy, Jeff?
Well, if we pull up the list, it's going to be hard to read because there is so much going on. After the close today, really, if I was looking at a stock to look at after the close today, it would be Nucor, NUE. All right, that could be a mover. All right, I was thinking about doing a trade on Nucor, but I held off because I liked my other selection a little bit more. But then tomorrow, I mean, you have everybody from Pfizer, JetBlue, UPS in the morning. And then in the afternoon, boy, after market close tomorrow, you have AMD, Microsoft, Google, three big names that you're going to be faced with. And they're not alone. I mean, there's others after the market closed tomorrow, as you can see. And then Wednesday is the biggest day. Not only is it the biggest day in earnings, but it's also we had the Fed announcement for rates, the rate announcement, and then the press conference. But you have MasterCard, Boston Scientific, Hess before market opens, and then after market close. Just it's really too many stocks to kind of touch on each and every one. I guess Qualcomm would be, and Boeing. So Wednesday, what's interesting, you have Boeing, which has been in the news quite a bit. That's before market and open on Wednesday. And then after market close, you have Qualcomm kind of in the tech space. And then Thursday, again, just the earnings keep rolling. We have Amazon and Meta, along with some financials. And let's see if anybody else stands out there. Not really on Thursday, but that's the big one. Merck in the morning, Altria in the morning. That probably won't move very much, but Thursday after the close, you have Apple, Amazon, and Meta reporting. So, Brandon, those are big techs really focused on the end of the week, and then we'll see what Friday to close out the week brings us. But very exciting, lots of stuff going on.
That's what I'm most interested in. I want to see Thursday. I want to see Amazon, Meta, and Apple. I mean, they just dropped their new headset and everything, and Meta, they're pulling into AI again. Oh my gosh, I can't wait to see these earnings go down. Trade today, Jeff. What do we got for us? Tell me what you're looking at.
Well, with all these name brand companies, we're going to trade a duck. Okay, we're going to trade
normal.
We're going to trade. We're going to trade AFLAC. All right, we're looking at AFLAC, and you say, "Well, my gosh, you have Microsoft, you have Amazon, you have Apple. Why not trade one of these stocks?" Well, the problem is they are so widely held that option pricing is normally the move is priced in. And trust me, market makers know how to price a potential move because there's so much news, so much information on these stocks that it makes a kind of a breakout trade like we're looking for a little hard to capture without it being a surprise. Okay, yes, there could be a surprise and we could see one of these big names move double digits, but it might be priced in already. Okay, so what we're going to do is look at AFLAC because this stock is kind of a little under the radar, but it is a mover. Okay, it's traditionally moved around 20% around earnings, but right now option market makers have it move around 13% priced in, I believe it is. So the traditional movement, there's your discrepancy in pricing, and we'll see what happens here. This is the same thing that kind of confirmed we saw with ASML. Okay, market makers had priced in something. I saw historical movements that dictated something else, and it turned out to be a triple-digit winner. This one, I don't think it's going to be a triple-digit winner. You don't know, but it's in an interesting space. Okay, Brandon, I just read an article today where, believe it or not, the one thing that people are having to sacrifice in their end of list of sacrifices is insurance, and specifically auto insurance. Okay, next was home insurance, and they're having to forego those because of the incredible rise in policy rates across the country. I know that personally, I sat down with my agent a couple weeks ago, and I'm like, "What the heck?" I use different language, but and they just had to explain kind of what's happening, the dynamics of what's happening. And let me tell you, with AFLAC being in that space, this is one that just stood out, especially since market makers had it priced for a smaller move than what historically has happened, Brandon. So that's what we're looking at for this week.
Interesting to bring that up. I mean, I've been looking at, I used to be an insurance agent actually way back in the day. And so this hits home for me because I know exactly what you're talking about. My rates are going up. I have a bunch of teens driving around. My rates are even more up, and it's kind of hard to take. But you got to think, with these rates going up, profits, man, for these insurance companies got to be through the roof. But then you mentioned something else. People are just skipping their insurance. Is that even possible to not have insurance legally for automobiles? No, but people still do it because they just simply can't afford it. So it's interesting you bring that up, Jeff. Thank you so much for the insight here. Where can people find out more about how you trade, Jeff?
Well, when we're talking breakouts and we're talking earnings, we do have a free guide that talks about how we do trade these earnings announcements. And you can find that guide at ewotrader.com/straddle. We do it a little differently than how you might have learned when you first started trading options. And part of that is by picking the right stocks. I touched on that here for just a moment, talking about where maybe a certain trade was priced and that historically the move has been a little different. Why is that? That might be something to trade. That is our edge. Okay. So if you download that guide, ewotrader.com/straddle, and you can get a little insight into how we trade around earnings. Love this time of year when we have multiple weeks of earnings announcements. That's when it's a lot of fun.
Hey, go pick up that guide if you can. Jeff knows what he's talking about. He's been crushing it on his trades. You can see by the trade that we went over at the top of the show. 150% winner. Great trade. We'll be looking forward to looking how this AFLAC trade does next week when we meet here again. Thank you so much for dropping by the show. If you haven't subscribed, please do so. Like this video, and for now, we will see you next week back here at the same time. See ya.